the interesting things about how the financial institutions have worked in the past is that they created a framework called the 3 lines of defence, with the first line being the business, second line risk and compliance, and third line audit. But actually, whilst those 3 lines exist, they quite often existed as independent silos, using their own naming conventions for things, drawing their own boundaries around what they include in an assessment unit to determine whether something's working or not.
Firms really need to be focused on risk front to back. There is so much data in institutions, and that's what I found. It was very, very difficult to see the wood for the trees when it came to operational risk. What I really expected was my risk and control partners to help me make sense of that data and to really focus on the things that matter.
So one of the interesting changes in my career has been the move from being the head of audit at Barclays into being a non-exec. What's interesting about that is one of those roles as well is a senior manager regime. And so that brings kind of pressure upon me as an individual to make sure that I'm on top of the risk and controls that are being operated in both the firms where I'm on the boards. I think one of the benefits of what Athens been doing and the whole kind of front to back approach is that it brings one common language for all 3 lines to use, so that going forward, instead of the debate being about the boundaries or being about the different naming conventions, it can actually be about what isn't working, and it can be about then finding ways to improve the control environment, because we have one standard language that we can all use together at the same time.
As a former CEO and board director, really understanding operational risk and getting a good view of the effectiveness of one's controls to manage that risk is really difficult. But that front to back is really, really important, I think, going forwards.